Hello and welcome everybody. Happy Friday. I hope everyone has had a lovely week. I apologize I was not here with you all for a webinar on Tuesday, but I'm super excited to be back here today with a viewer requested topic for today's webinar. I received a couple of questions from people asking, hey, I can't find where momentum has moved to. I can't find where I compare the previous matrix to the current one, or I don't know where to start. So today I want to start from the very beginning with you all. I want to talk about how to read the matrix, how to read the dashboard, the information that it offers you, but provide it in a very simple way. We're going to talk about three different categories today. We're going to talk about the beginners, the intermediate, so the people that are learning their way through it, as well as we're going to talk about the advanced, the people that know their stuff and want to see what the matrix can really do for them. So we're going to talk about all of those today, how you go from one step to the other, and what using the matrix would look like for all three of those people. If you have any questions, please put them in chat. I will be reading the chat. Kira will be reading it, as well as I have my mom, Julie Stav, on Zoom. So if there's any questions that she can help answer or to provide additional context, she's here to help us out as well. So hello, Mom. Great to see you. Let's get started with today's webinar. So I'm going to get started with just looking at the matrix overall. We're just going to talk about the different pieces of what it has and why those are important. So let's head right on over to the matrix. And let me just get my face up here. There we go. Hello. All right. So when you log into the matrix, which is at dash.sectorsmadesimple.com, you do need a subscription in order to get to this page. If you try and log in with no subscription, it's going to not let you. You're going to get a red error message. You need to have a subscription to log in here. So once you log in, what you will see is this big area right here. Where's my arrows? There we go. This big section right here is what we call the relative strength matrix. This is a comparison between the S&P 500 and 11 different market sectors, where we look at all of them on the same matrix at the same time to find who is doing better than who in a point in time. So this is not comparing yesterday to today. This is only looking at today. This is like taking a picture of what the market looks like on Friday, July 23rd, 2021. So if we were to look at this, we get a bunch of different things. We get this cool color-coded matrix part, but just focus on the numbers. The numbers are the important part, and it's the easiest one to get a grasp of and to start using. So we have three things here. We have positive trend, which is the long-term direction, the long-term trend of that sector. And then we have the X count, which is the short-term direction. Each one has a score from 0 to 11. So 0 is the least, which we see here. 11 is the max, which we don't see anywhere. And then we add those together to get our total count. If you click on positive trend, X count, or total, it will let you put them from largest to smallest or smallest to largest so that you can sort it depending on what you care about. So that's the main part. And I just want to mention really quickly that while we're going through this, we've done a lot to make sure that the information we're giving you on the matrix is not things you can get in other places. Some of it, yes, you can get. For example, on the left side of the page, you get prices, the daily price changes for these different ETFs. But everything else, we try and provide information that you can't get other places. And when we scroll down, we'll start to see a little bit more of that. So on the matrix itself, if we scroll down past the current matrix, we get to these two new areas, BPI and momentum. I'll talk first about BPI. BPI stands for bullish percent index. It's a way of saying, in the group of companies we're looking at, how many of those companies are on a buy signal or on a sell signal. So when we see here 39.92 for DISC, that means for the consumer discretionary sector, for the entire New York Stock Exchange, not just the S&P, the discretionary sector's BPI is at 40%. So 40% of companies in discretionary are on buy signals. But we also make point and figure charts of these BPIs so that we can track how they change over time. If you want to see the full chart, you can click on the label for any of these, which will take you down to the BPI chart for that sector. But if all you care about is the number and the direction, then you get both of those right here in this table. The BPI will tell you the percent, and then the column will tell you the direction. If we're in a column of X's, it's going up. Column of O's, it's going down. Next to BPI, we get momentum. Momentum is how we compare today's picture against yesterday's. It's funny. If you watch a lot of our webinars, you'll see me go from various stages of having long hair, short hair, no beard, beard. The momentum is a similar thing, where it lets us compare today's picture against last week's or last month's and see, did they get a haircut? Did they get a little bit of a tan? Maybe a sunburn? It's our way of looking at how sectors have changed. So what we see here is the momentum compared to, and then we get to choose when we compare it to. When you first load up the matrix, you'll see it compared to the previous one. So today, Friday, is compared to the last matrix we have, which in this case was Thursday, July 22. But by clicking on this box right here, where you see previous matrix, you can choose what matrix to compare today to. We can choose 1 week ago, 2 weeks ago, 1 month ago, 3 months ago, or if you're feeling really adventurous, you can click on the custom matrix button, the custom momentum, and then put in any date you want. So we can put in, let's put in my birthday, November 12th. And we can compare today's matrix to the matrix from that date. So here we see how the matrix from today has changed from my birthday on November 12th. If you want to see that entire matrix, you can scroll down where you'll see the matrix from that date. Many of you have asked, because in some of the older videos, this momentum selection here, how we choose which momentum to compare to, used to be up in this area over here. It's not gone, I promise. That's a great feature and we wanted to keep it. But we've moved it down now below momentum, so you can set the momentum in the same place that you see it. The last thing that I want to show you before we start talking about our 3 different groups is over on the left, we have our daily price changes. These price changes will let you go and see the chart for each sector, or in this case, each ETF. So if I click on XLB, you'll see it will open up a window down below where we can see the entire point and figure chart for that ETF. We can do the same thing for staples, real estate, utilities, anything. So that is the information that the matrix provides. It's a lot of information, but in a very compact way. It's meant to be something that when you first look at it, if all you care about is finding your next investment opportunity, it can help you there. But it grows as you grow. As you learn more about the market, about sector rotation, and about how to use the matrix, we have more and more features to help you. But before we even get to beginner, there's a step before that, which is I know nothing about the matrix. I don't know what these P's and X's are. I don't know how we're getting all of this. Where do I start? My recommendation for where you start is you go to learn.sectorsmadesimple.com. Oops, that is not the right link. Why isn't it deleting the message? Let me try this again. You go to learn.sectorsmadesimple.com. This is our learning website. You do not need to have a paid account here. You just need to create a free account. With that free account, you will have access to over 40 hours of different lessons that are organized in a way to help you learn. We, at this point, have done over 100 hours of webinars, 50 for members, 50 for non-members, but it's hard to know where to start, which videos you should focus on for different things, so we've tried to help you with that. On the Learn site, we have pre-built courses that will help you learn about what you care about. If you're new to the matrix and you have no idea where to start with the matrix, the Introduction to Stocks course is the one for you. This 12 class series, so 12 hours of classes, is completely free. You don't need a subscription to watch this entire 12 course series. And it will take you all the way from knowing nothing about sectors made simple, nothing about relative strength, nothing about ETFs, and by the end of it, you will know how to build a matrix for yourself. So that is how I recommend to get started. Again, this site you do not need a subscription for. You do need a free account because it will help track when you've watched the videos and which ones you've watched. So here you can see that I've watched the Sectors Made Simple introduction. So the next one I would watch would be the Origins of Sectors Made Simple. Once you've finished the video, you can click Complete Lesson and woohoo! One more down, 10 more to go. Now, if you are a Sectors Made Simple subscriber, these courses still have a lot of value because many of these courses include members' webinars that with your paid subscription, you have full access to. So for example, for the Options and Other Investment Types course series, the first 2 lessons on dividends and cryptocurrency are free. But with your subscription, you get access to the remaining 8 classes in the series. So there's something for everyone, both members and non-members alike. But now, say you've watched that first Introduction to Stocks course series. You now are ready. You get your Sectors Made Simple subscription and you say, I want to start using the matrix to invest. How? Well, let me show you how simple that can be. Part of Sectors Made Simple and part of any investing is learning a strategy. Strategies help us to provide context, get information, but more importantly, help us to make decisions. The matrix is a great tool for that because this already has a lot of information in it. So a lot of the work we already do with our little robot in the back. But for you, finding the strategy that makes sense is important. And the great thing is, many strategies work, but some work better than others. So let me show you one of the strategies that I've found that has worked the best, but is also the simplest. The way that these strategies work is we want to have some pretty simple rules, because we don't want to think. We want to let the computer and the strategy do most of the thinking for us. And let me just quickly say, strategies are not perfect. Strategies cannot predict the market. No one can predict the market. So strategies we work to create, so we build strategies that have worked in the past and work well today, but we never know what will happen in the market tomorrow. So please always take a strategy as guidelines, not as rules that you have to follow. And always, I recommend doing a little bit more research yourself prior to making any investment decision. With that said, let me show you the simple strategy that we've found to use the matrix. This is how I currently use the matrix. Just this exact thing. Every Friday, I go to the matrix. I log in, and I scroll down to momentum. What I now do is I compare today's matrix to the one from 1 week ago. And then I sort by X count. Again, log into the matrix, scroll down to momentum, set it so we're comparing against 1 week ago, and now I am going to buy the one sector that has the highest X count if the X count is 2 or more. So what I would do here is I would say, I only want sectors that have an X count of 2 or more. In this case, that would be industrials and energy. Uh-oh, I have to pick 2. Which one do I pick? If I have a tie, what I would do is I would take the one that has the highest total count. So here we see that industrials has a total count of 10, energy has a total count of 2. So I would say that I would go with industrials. I now buy industrials, and I'm done. That's it. In 2 minutes, I now know what I'm investing in. I buy industrials, and I check back next Friday. Next Friday, I'll do the exact same thing. See which sector has the highest X count above 2. Buy that sector, sell the old one. And that's it. That's the beginner strategy for using the matrix. But does it work? Oh yeah, it does. To show that, I'm going to show off another tool that we have here on the matrix. Underneath my face, there's a little sandwich icon. This little sandwich icon. If you click that, you can then click on Backtest, which will take you to what we call the backtesting engine. This is a way of taking your strategy ideas and seeing how they would have done in real life. This is not using fake information. This is using the real market, how it's done in the past, so we know what it might do in the future. So let's take that strategy that we came up with and test it from the beginning of January. You don't have to do this if you're just looking for the beginner method. This is where you start going once you get a little bit more familiar and a little bit more confident investing in sectors. So for this backtest, we're going to start on January 1st. For top sectors each period, this is how many sectors do you buy. We want to keep it simple, so we only buy one. Rebalance once every week. Here we're going to add our rule. And our rule was we want an X count momentum of 2 or more for the 1 week momentum. So X count is, do we want positive trend, X count, or total? Use momentum is our way of saying, yes, we want to use momentum. 2 is what we want it to be, so 2 or more. And then our momentum time frame, 1 week. And we run it. And what this will do is it will give us two things. It will give us a graph to show us how we did. So here we see the green line is our strategy. The black line is the alternative. Remember, anything, if you invest $1 into this strategy, that means you can't invest that dollar somewhere else. So the easiest place you could invest or put your money is in the SPY. It's in the S&P 500. You can put your money there and leave it. And that's a trading strategy. So to compare how well our strategy does, we're not comparing it to did I make money at all? That's too easy. We want to see here that our strategy beats the market, beats the SPY. So here we see exactly that. The SPY made about $1,800 profit since January. Then our strategy made over $4,000 profit. $1,800 from the market, $4,000 from our strategy in the same time period. The only thing we did was in the morning, after the market opens, we go, we look at the matrix, we go to our 1 week ago momentum, sort by X, buy the one that has the highest X count above 2. If there is no sector that has a X count momentum of 2 or more, we hold cash. We sell what we had before and we hold cash. Thank you. See you again next week. Porfirio is asking, do you sell your previous ETF before buying the new one? Yes. You sell the previous, and then if there's an ETF to buy, you buy the new one. If there is nothing, you hold cash. What time do you trade on Fridays? This trades first thing in the morning. I'm on the West Coast. I don't like waking up at 6:30. I buy it when I wake up, have my coffee, and look at the market. So that's how simple investing using the matrix can be. And as we saw with the back tests, it's pretty profitable too. We made 40% return in 6 months using a strategy that takes us 5 minutes once a week. Lucia, you're saying you buy on Fridays and sell on Fridays. Yep. You sell right before you buy. Which breakdown should I show? Oh, for the back test. Yeah, let me see if I can. Let me just set that back up again. Oops, not using PPI. X count momentum. 1 week. All right. So the first thing that this gives you is the backtesting results. If you scroll down, what it will show you is every single week, how did what you buy how did the strategies purchased do compared to how well did the market do? So we get how well did the strategy do, then how well did the market do, and what was the difference between those two. It shows you what it bought, how much it had, and how much it went to. Jesus, this works for pre-market and after the market. It works for during the day. So keep in mind that if you buy an ETF after the market closes, it's not going to fill. It's going to buy when the market opens for whatever that thing is going at. So if you bought on Friday at, like right now, 4:30 Pacific time, it's not going to buy. It's going to wait until Monday and then buy at whatever it opens on Monday. So if over the weekend aliens attack and the stock market collapses, guess what? You're buying that ETF for whatever it opens that day at. So you might buy for a lot less or a lot more than you would like. That's why buying during the day, during the trading day, is important. So you know exactly what you're buying and for how much. If we want to buy on Fridays but the market is no good, can we do it, or do we have to wait until the next Friday? Amazing question, and that brings us exactly to our second step. So that was the beginner. The beginner is you start with this simple strategy and you follow the strategy. Step 2, the intermediate step, is now you can start to make decisions. You can start to say, well, there's 2 sectors that have X counts of 2 or more. I can buy 2. Or you can look and find, instead of buying the sector ETF, you can then go and you can look at companies within a leading sector. Before I get to that, I want to answer these questions. Backtest will know when there's a tie between 2 sectors. Yes, the backtesting does know when there's a tie between the 2 sectors, and it will use the total count as the way of saying which one we choose over the other. What if the same sector is the leader again? Then you wouldn't sell it and you would just hold and see you next week. All right. So you're a beginner, you've gotten all of this, and you've watched a lot of our webinars. Many of our webinars talk quite a bit about how to use the matrix to start finding stocks. Okay, can I show a cash example? I'm going to come back to that because part of this intermediate step is refining the backtesting. But right now, I just wanted to stay with that and just show the backtesting as a way of saying, hey, it works. We're not just making up this strategy, it works. We'll come back to actually playing with the strategy and digging into the results in a few minutes here. What happens if the ETF drops? Then we lose money. We can't do anything about that. The market's going to have bad weeks, and it's just part of the risk. Investing is not guaranteed profit. You will lose as well. So, all right. So again, you've watched a lot of our videos and you've gained some confidence in understanding what a leading sector is. Now, what we do is we can look at the total count and say that technology is our leading sector. We can then use a screener like FinViz to go through and set our sector to technology. Now we're looking at companies in the market in the technology sector. We can add a bunch of different filters. So here I'm just going to add Be a Profit. If you're not familiar with Be a Profit, there's plenty of webinars that we talk about Be a Profit, what it is, and how to set up a screener with it. So I promise you there's resources for this. But just for today, I'm going to speed through this really quickly. so that I can show off what it would look like. We want our beta of less than 2 and within 10% of its high. Alrighty. So what I've done now is I've gone and said technology is the strongest sector overall. We then go and put all of our filters into the screener and choose technology as our sector. So what this has done is it's taken a strong way of choosing stocks and put it with a strong way of choosing the top sector. So we have 62 companies within the technology sector that meet our requirements for what it means to be a good company. That's a lot of choices to get started with. Maybe a little bit too many choices if you ask me. That's where our actually upcoming update comes in. Next week, we are going to be releasing the ability to make custom matrices, because I don't know if Apple is better than Zendesk. It's hard to find out. Well, rather, it's not hard to find out who's better between Apple and Autodesk. We can do that using a relative strength chart. But if you have more choices, then check this out. Coming soon to a matrix subscription near you will be the ability to make custom matrices. So 2 days ago, I asked my mom, Julie, to give me a list of companies that she thinks are valuable. And we wanted to create a matrix for them. So using this tool, we built a matrix using these 6 companies: CPLG, JAX, OMI, PAC, RM, and TX. And we created a relative strength matrix for all of those companies. So here we can see that RM has the highest total count, while JAX has the lowest. So an intermediate strategy may be that you go and you find the top total count. So you take the sector with the top total count. Then you go in and you find leading stocks within that sector. And starting next week, Sectors Made Simple subscribers will be able to take their list of companies and create a relative strength matrix with it to get something that looks a little bit like this, to compare those companies against each other and see which ones have the highest and lowest relative strength. So that's one way that an intermediate user could use the matrix. Now, Danny was asking, can I use them to invest in the SPY? Yes, you can. Yep, SPY is an ETF that you can still invest in. And we do look at it, it's still on the matrix, and it's right here. The second part is that our backtesting engine isn't just for looking and saying, I made money. It also has a lot of information that we can use as intermediate users. Because all of that information that we had down here, we can export. So we can go here and we can export and download those results, which we can then put into, if it will let me, we can go and put it into a spreadsheet program and look at the results in spreadsheet format. What this will let us do is not just compare our strategy against the SPY, but it will let us compare other strategies against this strategy to see which ones made the most money, which ones lost the least money, which ones were the most consistent, which ones had us not holding cash. Because if you look here we're holding cash. Was there something else we could have invested in during that time? The backtesting engine will let us do that. It will let us compare this strategy and many other strategies together. And we have webinars to help you learn how to do exactly that. We have, I think, 3 different webinars on using the backtesting engine, how to use the backtesting engine in Google Sheets, and using a little bit of what we've learned in the Spreadsheets Made Simpler classes to get more out of our backtesting. Nettie, amazing question. How many companies can we compare at once? Right now, we have the ability to compare 7 different companies at once. So we have 7 different companies at once. And when we release it, it's only going to be New York Stock Exchange companies. But if there are specific companies you want that we don't have, let us know and we'll do our best to add them, as well as we'll be adding the entire NASDAQ here in the future. So this is only the beginning of what we will be able to do using the custom matrices. This is just the start. So why not get in at the beginning and learn how they can be used? So that is our intermediate person. They know how to read the matrix. They know how to understand what it says. And they've started to play around with backtesting and custom matrices. And also using Be a Profit, or FinViz rather, using FinViz to choose leading companies within these top sectors. Blanca is asking, would those companies be from different sectors or just the sectors with X's? So these companies you can choose. It doesn't matter. They don't need to be in the same sector. They don't need to be in anything. You can choose any companies you want if we have them, and if we don't have them, let us know and we'll get them. But this is not only for the technology sector. This can be done for any companies in any sectors. You can compare different ETFs. You can compare stocks in ETFs. Anything that has value and can be traded in the US market and that we can get data for, we can compare in a matrix. So that's the next update. That will be coming to matrix subscription near you starting next week. So I look forward to being able to talk about this a little bit more with the Sectors Made Simple subscribers. Oh, sorry. Sectors Made Simple subscribers.
He's still working on issues. It's not next week.
It's not next week?
But don't say the exact date.
Okay. Maybe not next week, but very, very soon. And we'll be sure to let you know when that is. All right. So again, that's the intermediate person. They know what they're doing. They know how to use the different resources, but there's still more that you can learn. There's always more that you can learn. But at this point, you've learned how to use everything that's been given to you. The advanced user starts to use Sectors Made Simple to build their own thing, to build their own knowledge. Before I get to that, I want to answer this question. Are we going to be able to compare mutual funds too, like the ones we have with the new ones? So mutual funds, likely not, but if there are specific mutual funds you're interested in, we can try and get data for them. Remember that mutual funds are not traded during the day. Mutual funds they only update their price once a day, and it's after the market closes. They will go back and calculate their net asset value or their NAV, and then based on that NAV, they will say shares are now this price. So that's a little bit trickier because they're not on the NASDAQ or the New York Stock Exchange. They're off the exchange, or you buy them directly through a broker or the mutual fund themselves. But if there are specific funds you're interested in, we can add those. And what's cool is once we've added it once, then it's always there. And you can rerun the same matrix. So we ran this on July 22nd. I can come back today and run it again and be able to see how today's matrix compares to last matrix. We can get momentum for custom matrices so that we can see where it is today, but where it was last time and how it's grown since. Jonathan, you only buy ETFs. I do not just buy ETFs. I buy stocks as well, but I do buy ETFs because it's convenient and it's pretty quick and easy. Can you run one live? I cannot, sadly, because the tool is not done, so we don't have it available on the matrix. It is basically done. We just need to finish tweaking a couple of things, testing it, because the one thing that this does is it lets you create a matrix. And if anyone has ever made a matrix by hand, they know it takes a lot. This one matrix isn't just these numbers. It's 30 different relative strength charts. So that's a lot of stuff to create. So we're just making sure that if a lot of people go in and try and make a matrix all at the same time, it can still handle making sure everyone gets their matrix. It's not instant. When you request this matrix, the chances are no one has ever requested it before. You are making something no one has ever seen before. So it takes us a little bit of time to do that. So we're making sure all of that runs smoothly, cleanly, and simply so that you can get your matrices and be able to compare these matrices between one and another. Alrighty. Now, you've watched all of our webinars, you've stayed on top of the matrix updates, and you're ready to see what you can really do from there. That's where the backtesting engine really starts to show its value. So, in the backtesting engine, I showed you a very simple strategy. But part of a strategy is learning how to build a better one. Learning when you say a strategy isn't working as well anymore and when it's time to find a better strategy, whether it be changing the current strategy a little bit or throwing it out completely and starting fresh. I did a webinar a couple weeks ago in which I talked about exactly that. I talked about how I look at a strategy, how I say, all right, I had a bad week, that things are fine, I'm just going to keep going and we'll see what happens next week. To having a second week where things go down or the strategy doesn't work well. Okay, let's try and tweak that strategy a little bit. After a third week of losses, that's when I would probably throw out the strategy entirely and start fresh. We can do that using the backtesting engine. So let's go through an example of how. Here we can see our strategy from January to July. But we can also add another thing. We can add maybe a total count of 8 or more. So you can add up to 2 different metrics. So here we're using X count momentum of 2 or more with 1 week momentum, and then total count of 8 or more. You can run it. It is a 403 error, so we need to reload this page, and let's try that again. So we wanted an X count momentum of 2 or more, and a total count of 8 or more. And we only want the top sector. Oh, hey, look, the market beats us. Okay, well, maybe we didn't like that. Maybe we still want to keep it with an X count, but, we're not doing so great since May. There's 3 weeks in a row here that we lost money. So what I could start doing is going in and adding, changing, and modifying the strategy to find a better one. And then I may not even use this to buy the top sector. I may just use this to say, what sector should I go and look at? So this backtesting becomes something that is whatever you want it to be. You can keep it very, very simple. You can add total count, X count, positive trend, or you can even just add BPI. You can say, I want it where I only invest in a sector that has a BPI above 65. I don't care if it's in a column of X's or O's, I just want it to be above 65. You could say, I only want it to be if it's in a column of X's. I only want it to be if it's above 75. And with all of these changes, we see in real time how these results change. Sometimes they do better, sometimes they do worse. But all of this is how we discover new strategies. It's not just saying, oh, I had a bad 3 weeks. Oh well. It's saying, I had a bad 3 weeks. Let's go in and find out why. Let's look at the BPIs for those companies, or for those sectors. Let's look at what sectors we invested in: utilities, energies, and financials. Well, maybe there's something that they have in common. So learning to not just take a strategy and use that, but take that strategy and change it. Make it yours. Maybe you don't want to invest on Fridays. Maybe you want to invest instead on Tuesdays. You can find the strategy that trades the best on Tuesdays. You could even, if you wanted, trade on Saturdays and find a strategy that's built for Saturdays. There is no one single way to do backtesting. It's all about finding the strategies that make sense for you and the ones that you can use. The best strategy, again, is the one that makes sense and that you can use. It doesn't do very good. It doesn't do you much good if someone tells you a strategy, but you don't know what any of it means. Yeah, that's okay when you're getting started, but part of the fun of learning to invest and the real growth is learning why it works, learning how it works. So then, when the golden goose stops laying the golden eggs, you can decide, okay, here's how I change it. I change its diet a little bit, so on and so forth. Jesus, when you get a position, do you put a trailing stop? I do. I put a 10% trailing stop on stocks, 5% on sectors. Jonathan, have you tried BPI looking for sectors under 30? Do you think it's a strategy that can work? Unfortunately, we rarely see sectors under a BPI of 30. And by that, I mean we never really see BPIs below 30. And when we do, it's not a good sign. So like, for example, the last time that we saw a BPI below 30 was back in March of last year. March of last year was not a fun time to be investing. A BPI below 30 means that over 70% of the companies are on sell signals. It's a nice signal. It's a very positive sign when we see a reversal below 30%. But creating a strategy that only invests when a sector is below 30% BPI, you're going to be holding cash a lot. Alrighty. One of the last things that I want to show really quick is where a lot of this information comes from. Again, we've talked today a lot about how you start off very simple with things that you can be told. And more as you grow, learning becomes a huge part of that process. Learning how you use the matrix, learning how others use the matrix. So to help you out, if you visit our website, sectorsmadesimple.com/webinars, you can find a list of all of our previous webinars. Here's all of the members' webinars listed out by topics: asset classes, backtesting, bullish percent, trading strategies. There's over 100 hours of webinars on this page, and if that's not enough, there's an entire series in Spanish with my mom, Berta, Vero, Mayra, and more to help you learn how to use Sectors Made Simple to invest. Again, all of the webinars on here, all of the non-member webinars on here, you do not need a subscription for. You can go and start learning on our webinars page today. No accounts needed. All you need is the desire to learn. Now, if you are interested in trying to grow, learn not just how to read the matrix, but how to use the matrix, I highly recommend taking a look at a subscription for Sectors Made Simple. The subscription costs $600 a year, and that subscription includes access to the matrix, the backtesting engine, all of our members' webinars, and this entire Inversores en Sectores webinar series, updates to the matrix. So for example, the custom matrices will be made available, included in your subscription for Sectors Made Simple subscribers. We do live webinars every Friday, that's where you are right now, as well as every Tuesday. We have a members webinar, and we're adding new webinars every single week. So if you're interested in getting involved, now is the time, because we have shown how you can grow from understanding to using to building, creating, all with things that we provide here at Sectors Made Simple. But Sectors Made Simple is still growing and building as well. We are always looking for new ways to make sector rotation and using sectors to find companies to invest in faster, simpler, and in a way that makes sense. So look forward to more updates to the matrix in the future as we continue growing to help make investing simpler for you. Does anybody have any questions about the matrix, about strategies, about webinars, anything? This is your opportunity to ask. Jesus, do you notify when there's time to buy? We do not have notifications for buy signals because this is all relative strength. If you're interested in figuring out alerts for buy signals, we do talk quite a bit about double top breakouts, which is point and figure buy signals, and you can set up an alert with whatever you use. Webull, TD Ameritrade, Fidelity, they all have the ability to make or set alerts for those. But if there are no more questions, then that's where we can leave it for today. Mom, did you have anything you wanted to add to this? Try talking again.
Uno, dos y tres.
Yep, we can hear you.
Okay, no, nada más que I'm so proud of you. I am just hinchada como una gallina. I think that you and Nate and Kira give us what we need, which is the technology and the advance. And thank you for lending your ears to me and to the studies that I had to do by hand a la antigüita, and that you're taking now and giving it an incredible push. You have turned my little car into an incredible Tesla through this, what you're doing right now. So I think that if we join forces as we are doing here, man, this is good. And this is something that you can't get anywhere else, not for the arrastrapanzas, like I call ourselves, the small investors. This is really sophisticated information that, it's not easy, but it is simple. But now it's their turn. They have to study. We don't tell them what to do. We show them the tools. And I also told them, Jonathan, that maybe in the meantime, until they can get their own matrices, I can give you the list that I helped them populate, and you can help me as you did with this one, show them during the radio show what the status is.
We can definitely do that. We can definitely do that.
So thank you. Thank you so much for sharing this, because you just never cease to appease me. See, you guys, this is why we have to be patient with them, because you never know when they're going to come up with something like this.
I mean, for everyone
that's feel better, my sweetheart.
For everyone that's not too familiar with how all of this started, we got started because we wanted to show how sector rotation can be made simple and easy. It was a strategy that made sense, but there weren't enough resources out there to make it simple, and there were no resources out there available for people like you and me. Not the institutions and the big hedge funds, but Juanita and Juan de los Flores that just want to learn how to invest that cash that they're saving on the side. So that's what we're trying to do here. We're trying to provide resources and knowledge, but most importantly, confidence to people like you and me, so we can have the tools and knowledge we need to invest simpler. And Sectors Made Simple started only about a year ago. We celebrated our 1-year anniversary last month. So this is what we've built in the first year. So I hope all of you are ready and willing to be along with us for the ride, because this is what we've done in year 1. We have plenty more things planned for how we continue to make investing, relative strength, backtesting, matrices simpler.
And share. Give us the little thumbs up. Help us in any little way you can with your little granito de arena, because it really helps. It helps us all. Your success is all of our success. So let us help each other, and it has to be a win-win. So let's give these young people a big push. And I know that we can do it. And all I can tell you is that we're all giving it our best, and that we come up with things that are very high quality and things that you can be proud of. So, so thank you. Thank you, Jonathan, for sharing your stage with me today. I'm in awe of all of you, as it should be. Thank you.
And thank all of you guys for being here with us today, being a part of our community.
Without you, this does not exist.
Exactly. Thank you all so much. We'll see everyone back for another webinar next Friday for our continuation of our subsector spotlight. And members, if today's topic was interesting to you, over the next couple of weeks in the members webinars, we'll take each one of these groups, beginner, intermediate, and advanced, and do a special webinar for each one of you so that you learn everything Sectors Made Simple has to offer for where you are today and help provide you some steps to help you grow to the next step. So until then, thank you all so much for joining us here at Sectors Made Simple. Leave us a like if you can, subscribe if you haven't, and we'll see you all very, very soon. Take care, everybody.